Welcome to the first ever episode of Slav's Money Corner. And today I want to focus on, by the way, I do this with no redos or anything like that. It's just me talking, all right? I'm going to show you how to make money in the stock market. Real easy. If you're a complete beginner and just know nothing, about markets, know nothing about stocks, none of that. But you want to be rich like the wealthy, and I want to show you how to manage money like the pros, like financial advisors. It's just going to take you like 10 minutes to learn it. It's really no brainer. The financial advisors do have some value, otherwise, they wouldn't have a job. But you can self educate yourself and not pay that fee. And this is a good place to start right here. I'm going to show you right now. So, if you're a complete beginner and know nothing about money, all right, this is what you're going to do. The screen's going to get a little brighter in a second. First thing you need to know is you got to open up a bank account. Now, it's pretty basic, but I want to make this as bulletproof as possible, okay? You need a bank account if you want to have money in the markets and you want to make money without doing anything. Just put money in there and it grows, okay? It spits out more money. It's like planting a tree, and then the tree gives you fruit every year. That's what investing is like. So first thing you need is obviously a bank account. You can go to any bank, hopefully one of the bigger banks out there like Wells Fargo, Citi, whatever, Bank of America. The reason why you want to do a big bank is because you want them to be still existing if there is a major crash. And they will exist because there's something called the central bank, which spits money at these banks if they're in trouble. So get a large bank. Open up a bank account, and then we're going to go to step 2, which is you want to open up a broker account. Now, the most beginner friendly brokerage account that I know of is the one that I use personally, which is Robinhood. Okay, Robinhood is also an app you can download on your phone just like any other app. In fact, I'm going to show you my Robinhood account, so don't mind that. This is for the future. So this is my Robinhood account. This is the value of the account since I've started it. I really started taking it seriously somewhere around here in August 28th, 2018. And I actually run a video log how to take 30,000 to a million. So you can check that out on this channel, of course. This is just me. All right, back into the educational session here. So open up a broker account. That's step number 2. Go to Robinhood. It's going to ask you for your bank account. It's going to ask you some personal questions. You got to enter in that data, but just do it. All right, nothing bad's going to come out of it, I promise. As long as you pay your taxes every year. So open up a Robinhood account. In fact, if you get referred by someone, it doesn't have to be me. You can refer by someone. You get a free stock to start out with, so you can get like a few bucks in there to get yourself started, even if you have absolutely zero money. But you will need that bank account not only to open up the account, but also to collect your winnings at some point and to get approved. So number 3 is you go and you search the symbol VOO. Those are not zeros. That is those are letters, VOO. So I'll go and show you. If you go on the website, you can do it on your app, of course. But if you go on the website, you go on this search symbol over here, and you type in VOO, and now you get to what's called an ETF. An ETF stands for exchange traded fund. You don't need to know any of that. All right. Basically, what this fund does is it tracks the best companies, the best or largest companies in the United States, and it tracks their performance and also spits out profits that they would allocate, to their investors, right? People like you. So if you buy this fund, you're basically buying a piece of 500 companies, okay? All of them, like McDonald's, you name them, Apple, Microsoft, Johnson & Johnson, all of them. All right, so you gotta buy VOO. There are other reasons that I'd refer you to this because it's a very low cost exchange traded fund. So again, you don't got to worry about that. If you don't know anything about it, just buy this fund and just hold it forever. And you don't want to just buy it. You want to actually continue to buy over time, okay? So you get a chance to invest more money. So just put away your savings, a portion of your savings in there, like a large portion, hopefully. And if you buy this fund if you're a little more advanced and know how to set this up, and you can't do it on Robinhood, but if you're a little more tech savvy, you can just buy a what's called a Roth IRA account. That's ROTH space IRA. So you can buy this fund under this account, which will give you tax advantages in the future. But don't worry too much about that right now. So step number 3 is buy VOO, okay, and just continue buying it month over month just to increase your allocation in that. Okay, increase the amount of money you have in that. It's gonna grow over time. It might fall by 50% this year or next year. It could happen, but you just have to continue to buy. Okay, that's the secret. All right, if this fund falls in value, it's kind of like your tree getting chopped off by a lightning storm. It's gonna recover over time. Okay, and it's gonna keep growing and keep giving you fruit. Even if only half the tree gives you fruit that 1 year or the next year and the following, over the long period of time, it's gonna continue giving you fruit, and it's gonna regrow the branches, etc., and it's gonna definitely die after you. Okay, so it's gonna keep giving you money forever. Step number 4, if you really want to be safe and you want to avoid that lightning scenario, what you want to do is put some of that money into bonds. Now, what is a bond? Bond is basically government debt, and it's considered one of the safest things you can do with your money. Okay, put it in bonds. It's pretty boring. They just collect. You can just collect very small amount of money every year, and it does go up and down in value, especially if you buy it under this symbol here, BND, which is a total bond fund. It just encompasses all kinds of different funds. All right. So instead of buying just VOO, you can also buy BND, and that will kind of balance out your portfolio a little bit, your accounts. So you just go on the website, type BND, press enter, and then you go over here, how many shares you want, 1, 2, whatever. It's $15 right now. The price of all these things doesn't actually matter. What matters is how much it changes in price. Okay, so it doesn't matter if it costs $160 or $15. It doesn't say anything about the value of what you're purchasing. That's a really important point to note. Okay, so you just buy a bunch of these, and what is the ratio going to be? Well, you have a VOO to BND ratio. You can have it at 90-10. Let's say if you're a little bit more aggressive and you are maybe young, or maybe you just you'd like your money to grow faster and you're willing to take on a little bit more risk, then you do like a 90-10 allocation. So 90% VOO and 10% BND. And if you're a little more conservative, you want to be about 60-40. So 60% of your holdings in your Robinhood account or whatever kind of brokerage account you choose should be VOO and 40% BND. If you don't like that much play, there is another option. What you can do here is you can keep some money in cash in your account. If you do it in Robinhood, that cash will also give you a percentage, like maybe 1 or 2%, depending on what the rates are, per year of your money will be automatically deposited, I think daily they're saying, into your account. So that's not 1% daily, that's like 1 or 2% per year, but you'll get a few pennies deposited there every day or every month or whatever. So you can keep some money in cash. And what is the ratio going to look like for that? Well, you're going to put about 80% in VOO, 10% in bonds and BND, and 10% in cash. You can play around with that formula, okay? You can pretend to be an expert and you can play around. You can say, well, I'm feeling a little more conservative. The market's been really on a tear like it has been lately in the last 10 years. And so I want to be a little bit conservative. So I'm going to put, let's say, 60% VOO, 20% BND, and 20% cash. Just going to keep it in cash in an account. So you really should have just 2 symbols and the cash. And now you're basically a financial advisor. I mean, you got really, really powerful information. So this information is going to allow you to grow your money over time. That's all information you need. I mean, it's pretty simple. It's going to allow you to grow your money over time. It is extremely unlikely that anyone, no matter how expert they are, anyone beats the market consistently. So VOO basically is considered the market, okay? and it's really unlikely for anyone to beat it on any given year. There's actually only a 10% likelihood that anybody's going to do better than this, what I'm showing you right now per year, just VOO. And if you just follow this, you're going to beat the majority of the players out there, professionals or not. It doesn't matter. Um, the chances of someone beating it like 10 years in a row, I think was maybe 5%, and 20 years in a row is like 1%. It's just incredibly small odds for anyone. It's just Warren Buffett and a couple other guys there up at the top that has beat the market consistently for 20 years or more in any given period. So there you go. This is the most bulletproof to make money. If you want to beat this, you're going to have to do a lot more digging. Like I said, I run a video log that I show you some option strategies, some really complex stuff that you can do, and I try to speak in plain English, but I'll probably I'll do a lot more beginner stuff. So hopefully you learned something here and you enjoyed this. I don't know if you enjoy it, whatever, but hopefully you learned something, and I want to help you with your money. So if you want to manage money like the really well off to do people, this is what you do. Okay, and you just adjust these percentages every year, and it's called rebalancing. So if, let's say your bond position, let's say you want a 60-40 split, and your bond position's higher than your VOO position, then you'd rebalance. You'd sell some bonds and you put it in VOO, right? If you have a cash position, if the market crashes and VOO gets reduced by like 30-40%, use the cash position and just put it all in VOO. All right, and that's it. That's all you got to do, and now you get to beat 90% of money managers out there. Simple, right? All right, that's it for now. Peace out.